A volatile week lies ahead for us in the crypto sector, but of course also in the traditional markets. In just the last 60 minutes, over $100 million in long positions have been liquidated. The reason? A, poor risk management, and B, bad timing. Because on August 20th, Jerome Powell will once again appear in front of the camera and let one thing or another slip, and from August 21st to 23rd, Jackson Hole will take place again, along with a few speeches. And this is very important because many, including the traditional markets, have already priced in an interest rate cut in September. So what happens if there is a standstill? What if there is an interest rate hike or a rate cut? What will happen to the markets? Are we prepared for what's coming? Do you have the right trades planned, or are you possibly already backed into a corner again? Today, I'll clear all this up once again to kick off a wonderful trading week. So if you don't want to miss anything about crypto economy, stay tuned to J-Wave Trading and subscribe to the channel for free. We'll see each other right after the intro. All right, as usual, we'll start with the on-chain down because that's very important, the outflow. We need to get a sense of market psychology to understand what's happening with investors in the background right now. Nowhere else where you might want to invest do we see such clear, beautiful data that helps us so much in making the right decisions. Yes, we see the blue line. I've shown you the last 2 weeks here. We can see that in the past 2 weeks, there has been massive accumulation of Bitcoin again. It must be said that the futures volume is being kept very low, yet Bitcoins continue to be bought. Of course, Michael Saylor also has a bit of a hand in this again. These are not the Bitcoins that were accumulated here. No, he naturally buys over the counter, but of course he always mobilizes his fan base, who also buy in here. Then we also have the insight that this time, at least from the day before yesterday to yesterday, it wasn't the long-term holders, but rather the short-term holders who sold off Bitcoin here. But nevertheless, we can see over the past 2 weeks how strongly the long-term holders, those who truly believe in Bitcoin, have sold off here. This is extremely, extremely important for us. Yes, so let's take a look at this right here in Excel. We can see that from yesterday to today, there's only a minimal change. No bullish impulse nor a bearish one, completely neutral. Yes, my statement was correct. 3,780 Bitcoin was sold off by the short-term holders, and then 4,333 were bought up by the long-term holders. We see no change among the whales. That remains the same. A few bigger players have exited, but it's all still well within the green zone. The open interest data has decreased by 1,360. We also see that the leverage ratio has gone down. So that means fewer bets, less risk on those bets. There was a slight increase again. Saturday was really down. You can also see that from the volume, which was 14 to just under 15 billion, even 17 billion. That's really nothing at all for Bitcoin. Yes, so we see a slight increase in long dominance. If you look at the funding rates, they've risen slightly here. The closing price was at $117,478. Yes, we know where the price is right now. Of course, it has dropped quite a bit. If you look at Ethereum right now, from the chart, you can say, yes, okay, the black line is the balance. Here too, over the last 2 weeks, there has been very, very strong accumulation. But the volume has also dropped significantly here over the weekend. You could say, yes, the holiday is over. There are still places like Baden-Württemberg, etc., where some people are still on vacation. In Switzerland, I think only Ticino and maybe Geneva. Feel free to correct me on that. The rest should actually be starting school again as of today. That's why you can feel it a bit. You could say it was maybe the last nice weekend. Let's hope that's not the case, of course. So in any case, I've compiled everything for you in Excel for a clear overview. A total of 8,604 units were withdrawn, accumulated, but that's just a drop in the ocean. Compared to the supply that's in circulation here, it's nothing really. So stay in your seats. Don't start cheering just yet. Keep sticking with it. So then we have no change in long dominance, 0.005. But we can also see here, similar to Bitcoin, that there are fewer bets being placed and with less risk. Okay, 4,475 was the closing price for Ethereum, and the volume is comparable to that of Bitcoin. Saturday was worse, Sunday a bit better, but still quite a bit more than with Bitcoin, right? That's really incredible. For a long, long time, it was actually the other way around. So with Bitcoin, there were outflows 14.1 in total overall because BlackRock still had a bit in the triple digits. The big spoil sports were, among others, ARK Invest and, of course, GBDC here, which was sold off. With Ether, there was actually an outflow of 59.3 million as well. You can feel that, well, people are just expecting something this week. It's getting a bit special. I'm watching with anticipation. Also, as I said, nothing came over from staking either. So it's pretty certain it will be October before it's approved. It could be that people were speculating on this statement, which ultimately came to nothing. Let's see how the inflows, or more specifically, the outflows of the spot ETF data develop over the course of this week. There was an inflow for Solana, 7.4 million, which wasn't particularly significant. It will take a bit of time. Let's see how the whole thing develops. Then we'll definitely see how things progress. Interestingly, the current market liquidity, and let's refresh again just to be sure, has briefly dropped below 115. Yes, so there's the golden rule. The market goes where the liquidity is, and right now the liquidity is actually around the $120,000 mark. There we have about $2.12 billion that can be captured. Interestingly, even in terms of leverage ratios, that is, the leverage techniques being used here, it would be relatively easy to trigger, at least with a slight swap at $117,000, even though there isn't much liquidity there. So at 117, we have $622 million. But it should be noted that at the start of the week, it's usually always a bit lower. So this will develop over the course of the week. So things could get very interesting. Going down further could be worthwhile. Yes, you could still liquidate some longs. Yes, up to $112,000, there would still be something there. There we'd have just under $1 billion. That would also, of course, be very, very interesting to trigger. Yes, as I said, now you can already see things a bit differently. Altogether, that's already $84 million. That's not a huge amount. It was really just the last 60 minutes that moved quite a lot here. Today, we're going to use the other order book again. We're taking a closer look at it. So you see, this is what I've always warned about. So when we came up here, or kept coming up here, we said, guys, be careful. Down here, it's completely empty. We have no support. And every time something small came in here, it held for a bit, then it broke away and we crashed down. That happened pretty quickly, considering we're now about $9,000 away from the last high we reached, the last all-time high, and that was on August 14th. Today is the 18th. That was 4 days ago, my friends. That's how fast it goes. And the higher we get with Bitcoin, the bigger these correction moves become. So if we ever reach $500,000, then it'll be $10,000 swings back and forth every day. Completely normal. Great for making money if you really have your trading under control. So that's very interesting. The floor for us right now, though not extremely strong, is at $110,000. Above that, a cap is forming at around $120,000. So our range is $10,000, which is relatively high. We're pretty much in the middle at the moment, so that's something you need to be a bit careful about. If you look at the point of control, meaning where the most volume, the most trading volume was, then you have to say, okay, that was at $119,000 or even a bit lower somewhere in this region here. It could be that we might return there again. Earlier, we checked where the liquidity is, so around $117,000 or $118,000 might be possible again. Otherwise, there's still a bit of liquidity below that could definitely be picked up again. As I said, today is very important. The dollar is preparing for a busy week with geopolitics and a Fed speech. That's exactly what I mentioned earlier. In the intro, August 20th, the shareholder poll will be important. Asian stocks, the Nikkei index and so on have risen sharply. A lot of money is currently flowing into tech stocks, which at the same time is also a bit of a warning sign. Because if Jerome's poll remains restrictive and says the PPI data still gives me pause, I won't be raising interest rates now. We'll wait and see until October. Well, I'm sorry, but then things will get really volatile. We might have to scale things back. So Jackson Hole is going to be very interesting and exciting again. That will start on August 21st. We'll have to see what comes out of it. You can definitely already sense that the dollar is preparing for it. If there's a rate cut, of course, it will lose strength again. If things remain restrictive, there might be a slight boost. Let's see. And there aren't any major topics right now where you could say, okay, the dollar is going to gain significantly. There are some things that are still kind of up in the air. Today, among others, Donald Trump is also meeting with Zelensky and some government advisors from Europe, including from Britain. Then we have France stopping by, Italy, and who else was there? There was someone else. So let's see what comes out of that. What will be decided there? How will Zelensky approach the deal? Will there be a short-term ceasefire leading to peace talks? If that happens, then how could things get interesting? It could really become very volatile over the course of this week and the next. So we definitely need to be careful. So it could get interesting for everyone. Thank you. Let's see what really happens there. Yes, and if you really want to learn how to trade professionally and sustainably, if you want to achieve, among other things, a win rate of 95.19 points across all trades. We've made over 333 trades in the Academy Club. These are learning trades, so you can really learn it. In the last 90 days, we've made over $3,800 in profit. These are small amounts. Anyone can join in to learn. You can see how to enter, where I exit, and so on and so forth. So, just join us in the Academy Club via the Telegram group, participate with us, and learn how it works. Otherwise, of course, you can also really soak up the knowledge from a true crypto economist like me. You can learn that here. You can book a free trial coaching session with us. Just click on the link here, join in, pay attention to everything, and otherwise you have the option to book the masterclass. The masterclass is where several literature books are condensed into a single video. There are several videos, so to speak, and of course my expertise. You get everything here firsthand. You have the best background knowledge you can get to learn and to trade. It is very well suited for beginners, but also for advanced learners. We have received incredible, great feedback. You can also read them on the website. So everyone who has worked through this masterclass has come back completely satisfied. And of course, we have the Aufbau, hybrid system, scalping, and other courses. The J-Wave is also included on top of the masterclass for a very small additional fee. I'm working on that. Elliott Wave, mindset, and much, much more are still to come. So you can look forward to more content. So that's it for the self-promotion. Now back to the topic. Yes, Jackson Hole is just around the corner. What about interest rates? A slight increase here. 15% expect that there will be no rate cut. A solid 85% say there will be a rate cut. At the moment, I'm still on this side here, currently. A lot depends on what's happening geopolitically right now. I could switch sides this week and adopt the other opinion. It depends. Will there be peace? Yes or no? Will Jerome Powell implement a rate cut based on the current data available to him? Then he could say, yes, I will. But if he takes a speculative approach and says, well, the PPI was already, and now other things are starting to rise again, then I have to say, I will not lower interest rates. So it's very exciting. We have to see what kind of economic data will rain down on us. Guys, this is going to be incredibly intense. So when you look at the chart and analyze everything, we always have to start from above, from the big picture. Let's take a look at Bitcoin dominance. Here we can see that we've already arrived almost exactly where we had calculated. Here we've reached the breakout from the rising wedge. By the way, we were the only channel that analyzed this and said we would fall into this region. However, the altcoin season still needs a slightly deeper drop, ideally another 8% down here. Let's see if that will happen. The dollar index is also very, very important for us. So how many people are still fleeing from the dollar or not? Currently, it is still considered a safe haven here. Of course, we want to be a bit cautious here. Gold is also currently forming an ascending triangle here. We already entered TP1 a short while ago. TP2 would then be here at 35.78 to 36.25. If gold rises as well, Bitcoin also partially benefits from that. So we'll see how things develop from here. In general, when interest rates are cut, a lot of capital flows into the markets. Bitcoin will also benefit greatly from this, and that will make for an exciting situation here as well. Up here at TP1, the pullback was rejected. We came back down to the pullback, briefly moved up. This is what we talked about. Last week when I said, be careful, this probably won't hold, then we'll drop down into the zone. And that's exactly what happened again. The J-wave technique is truly unique in trading analysis, and with it, you'll be safer and more successful. You can see here again, the range is from $116,000 to $114,000. We're right in the middle of it. The current risk management remains at $106,000 to $103,000. You can see here, okay, we've almost reached the long zone, but not quite yet according to the RSI. That means the market has cooled off again and people are ready to invest in this amount once more. It's not completely overheated. However, we can see that the bearish cross has started again in the short term. There was no bullish cross, so we have to expect that we might see another small dip. How deep will it be? If we want to see that, we can actually pinpoint it here by doing the following. We'll do this here. We'll go in here and take a quick look. Yes, it will be around $114,200. Maybe let's just make it $114,000 to be a bit on the safe side. Sounds good. When we were up here, I said that now we're getting good entry prices. Ideally, you would ladder in starting from the pullback anyway, laddering down all the way to $103,000. The best entries are made by laddering in. Every 1,000, every 500, it really doesn't matter. That works really, really well. So what does it look like to the upside? Overall, we have this sequence from this low to this high to this low. The sequence remains here. We were rejected at the pullback here. But if we want to, let's say, break it down a bit, let's bring in the bigger picture here so we can keep that in mind. We'll also draw a pullback line so we can remove that and it will be less confusing for you, okay? Pullback, that's right. Let's carefully put this in here and gently take these out, okay? Now, we have a new sequence from this significant low to this distinct high to this subsequent low. Even if there are still impulses suggesting we could fall even lower, it's not a problem because these 2 points are fixed, okay? So we place this precisely and go downwards. That means if we drop further down here, it's simple. You can just adjust it here. Then you just follow along. What's important is that we don't miss the move for the upward rally and always have the pullback ahead of us. So we would have the chance for a new all-time high from $123,800 to $125,800. We have a pullback from the current perspective, which in my opinion should still be postponed. If you go by the RSI, etc., then we would have a pullback at around $121,300, give or take. Here would be the pullback. The pullback means that, according to the rule, this is where you are most likely to get rejected again. If you get rejected at a pullback, you usually form a lower low, or you break through and then enter the profit zone. So that means overall we would have a new target of $135,000 to $138,000. That's really how things look this week. This is our range. That's what we have to work with, and we need to be prepared for more exciting trades that are coming our way. With Ethereum, it's similar. You could say the J-wave worked very well again here. We jumped right into TP1, 438.84 to 492. Now we're already on the move, you know. So the lower area here, as I said, that's your risk management. We even wrote that in, guys. Yeah. So this here is your risk management. Somehow the color scheme looks a bit unusual, but that's not really important. Yeah, in any case, what's really crucial is that you pay close attention and don't get burned. You need to be prepared. But despite everything, these are exciting long-term trades that you can set up here. So with the drop downwards, you can also do compounding, meaning realize profits, increase leverage, build up the trade, and so on. Of course, you learn all of that with us as well. With Ethereum, it's even a bit more obvious than with Bitcoin. We're still far from the long zone on the RSI here. We've only just seen the cross here and it's going a bit lower, but currently that's also accompanied by volume. I also think that Michael Saylor's comments regarding Bitcoin aren't as intense as they used to be. But of course, it's still exciting. I think people are more triggered by the altcoin season now. There are many people I've talked to, but I've talked to a lot of them. Honestly, I don't think I've ever talked to so many different communities before. Whether it's at the car wash, in the pool, somewhere in the sea, on the beach, or at dinner, whatever. And a lot of people said, like, as soon as the altcoins hit their all-time high again, I'm out. I'm moving over to Bitcoin. That's actually the right approach. For me, altcoins are there to speculate, to save up Bitcoin. How do you see the whole thing? Feel free to write it down in the comments below. I'm out for now. Saying goodbye from Switzerland, stay healthy, and see you in the next video. Goodbye, everyone.